Welcome everybody. I'm Scott Patton with Waves of Profit. I've got one of our students, Steve, on with us, and Alan is going to be taking us through some of the amazing improvements that he's made to the Wall Street Genius and the Waves of Profit programming. This is a program for people who want to trade stocks, day trade, and also swing trade, but we tend to focus on day trading simply because you can sleep at night when you know that you don't have to worry about what happens to the stock market overnight when you're sleeping. Sometimes it goes way up and that's against your position, and sometimes it goes way down and that's against your position. So when you've got stocks and you're sleeping, you never know what's going to happen, which is why we think getting in, getting out, making 10, 20, 30, 40, 50, 60, 70, 100%, 5, 10, 20, 30, 60 minutes is a lot better. Don't have to be greedy, and you can just sort of go that way. So with no further ado, we're going to move it over to Alan, and he's going to take us through some of the changes. We call it the one screen, and we've done everything we can to simplify this and make it easy, and hopefully in the next 40 minutes you will have an understanding of how this program works, and you can contact us for more information. And here we go.
Thank you, Scott, and hey, good to see you, Steve. I'm glad you're making money when you're trading. That's really the goal. So just a little bit of a sidestep before we talk about this one screen. What we used to do, and it's still available for people that want it, is we've got all these other lists and windows that are special purpose, that do a special job, that give you great information along one view. But what we were finding was that there's a few people that it's just too much information, or they can't. It's getting going it was the challenge for them. So there's all these things, but where do I start? And after I've started, then what do I do? That part's easy, but it's the getting going is really been the problem for a few people. And there's a lot of material out there, and a lot of it's not useful, and it takes a long time to disseminate down to, well, what actually works. So we've had this program now for many years, and we've had people using it, and this is the one window, is just the idea is to make things a little simpler, so you only have to look at a few stocks, not the whole list of them. That's the whole list right there. And this is in the replay, so this is how you go practice without putting any money. You can see there's a lot of columns and a lot of stocks, and there's people that are using this that love all that because they like, this column and that column, and then they shrink up the one they don't care about, or they hide it. Whatever they do, they make it work to their style. So for beginners, though, it's like I only want the good stocks, and I don't want to have to look at the stocks all day and figure out which is the better ones. And this is a day we pulled up randomly just before we started, and you can see there's quite a few stocks here that are showing on the red side that look like they're good, and there's one good green one here as a possibility. And I'm just going to go to the end of the day, and you can see here, for example, that stock did nothing, and I'll explain how you know that it did nothing. When we'll cover all that stuff, it actually doesn't take more than about a half hour to really get a general grip on this. But so what you have is you've got a reduced number of columns, a reduced number of stocks, that these are the best possible choices that, based on probabilities. And we don't care about trading all day and all that stuff. We just want to have 0 or 1 good trade a day when you're beginning. If you get a bad trade, one's okay out of 5 or so trades, so long as you get out with a small loss, because that's the way. But getting started has always been the challenge, and so now it's like, well, why don't you just go with the best probability stock? So this one is one of them. I'm going to hide some of the stuff here, and so we can just get started. So I'm going to hide almost everything. And I'm going to tell you what's going on here. Is on the top half of the screen, this is today. These are 5-minute candles, so that means the stock in this case here moved from whatever that price was at the bottom of the green box to the top, and that's called a candle. the price opened there, it closed there, but it traveled the whole range where these little wicks are. So that's a candle. So those 5 minutes of trading activity happened in here and in all of these things. And you can see that some 5 minutes, like that one, was a lot busier and more active than, say, these little guys over here. And the bottom third of the screen, I'm just going to put a little coloring up so you can get a distinction. This part here, this is the last 7 trading days and today, and we want that because it gives us an idea of, well, what has this thing been doing? And that's actually an important feature. What has this thing been doing gives me an idea of what it's likely to do. Now we have all these windows, like I say, broken down into finer detail and daily charts and 15 minutes per candle. This one down here is 60 minutes per candle. But I'm going to break it down to you to be really simple because that's where you want to begin. And then you can add your perspective and, personalize it. So here, this one was pre-selected as a good stock for green. That's what the G stands for with a green background. And this is the end of the day, so we've seen how the day turned out. But this is where it's good for you to, begin practicing, is to say, hey, how did I know it was a good day? Well, you can look at the tools and we'll discuss that. But let's just look at the fact that this thing said it was going to be a good green stock today, and it was a phenomenal good day for this stock. And then, well, you've got stocks that went red on that same day as well. Yes, we did. And they were pretty good red. So the point was, it was telling you before the day began that the side you should be interested in on that stock is the red side or the green side. And you can see that the red side did better than the green. The green was small, but the red was nice and long. That's the kind of stuff we want. It keeps you out of trouble. So here it's up and down and whatever, and we told you that the red side would be the better side based on statistics. Now, this was the red move, and it really wasn't good. And we have some rules, and that's one of them I just turned on, the risk zone. If it's in that middle crap, moving around, doing nothing, don't get it. It's probably not going to go anywhere, and it didn't. And that's the kind of stuff that we've got for testing and rules, and get into some of the details. But the big picture is it's telling you, look at the green side. When it's out of the risk zone and it's breaking outside of that, it's a fresh candle and it's continuing, that's where you're probably going to make some money, or at least break even. You're not likely to lose money. If you do, your loss should be small. And that's the whole part about getting started. And so all you need is one good trade a day. So here, this was a valid good trade because of it's outside the risk zone. It had all the features going about it.
The risk zone, Alan, is the gold?
Yes, that's that middle part right in here where it's like you want to be trading to the green side above that zone or to the red side below that zone. But inside of it, if you get a fresh signal inside of it, it's not good. And you want to be fairly close to the zone, not way sitting up high. So like over here, now, in the first half hour of the day, we don't pay too much attention to the risk zone. The first half hour of the trading day is different than the rest of the day. And you can make some really fast money in the first half hour, but you have to be fast, and that doesn't work for some people.
And we're talking about a totally different strategy than the strategy we're talking about right now.
Yeah, it uses most of the same stuff, but it is different. So because the charts and people don't want to get started in the rush. Some people like it that way, but we like you to get good at the slower pace from after 10 o'clock market time. That would be New York time. We want to get you started with the easier going pace, get good at that, and then if you want to go to the first half hour of the day, we've got a couple of strategies that work really well. You just fine-tune this one. And that's just a bit of fine-tuning, like I say. It's easy stuff, but it's like, hey, just get comfortable, get good at it, and then after you've done that, and you can do that, part-time here and there in a month easily, is to say, hey, I can see how this is working. You have to spend a bit of time at it because this is, it's a business that you're making for yourself. So you want to know how the stuff works and prove to yourself that it's working.
We don't want to guess.
No guessing, and that's the key point about this, is we want repeatable success. So one of our fellows locally here, he likes the VAR bar strategy, which is a 10-minute strategy for the first half hour of the day, and he showed his brother how to do it, and it took him about 15 minutes to explain it, and his brother was able to repeat the same level of success. And you know, he's making he'll be job free in about a year. But that's what can happen. And then, you know, financial independence is one thing, but if you're job independent, that's a good place to start. You know, then if you want to trade all day, go ahead. But he's got a job, so he just wants to trade the first half hour of the day, and then he'll go to his job. And he's got a 4-month track record. He's doing it right. He's tracking every trade he does. He puts it in a little Excel sheet, and he's got an awesome results coming from it. And he taught his brother to do, and his brother is picking the same stocks at around the same time and making the same rate of return. So anyways, that's the kind of stuff we want. So this is a simpler system than what the VAR bar system is. And it's meant to, you can do this all day. So if we go look at another stock, you can see just on the rules we just talked about, there was nothing to do with this stock all day. It just wasn't there. So we're going to give you a couple more of the rules. There's not that many. The thing I'm looking for is on this bottom screen. I'm going to hide the time. So this is multiple days. I'm going to hide the other parts too. This is multiple days. I'm looking for this stock to be down near the bottom for the last 7 or 8 days, or near the top. If it's at the top or higher than these ones, it'll be a better running stock, most likely, than if it's in the middle zone. You might catch a small move here, but the bigger, better, safer moves are when they're breaking outside of where they've been for the last 7 days, and that's trading days. So this move wasn't going to be a great one because you can see the setup, the position it started in, was weak. So we're just going to thumb through a couple others, and again, this was picked at random. I'm going to put the time back on so you can see that was the previous day, is that box there. But here, this was a great setup for red, because if we go back to the beginning of the day, I'm just going to go there, you can see how it broke right there. It broke outside of the previous range. This would be one of our best candidates for a great red run. And it's telling you, it's got a rank of 15, we'll talk about that. It says you should be looking at the red side. The market at this time is red. It's kind of a weak red, but that's what this little bar up here is, where it says 16 above the stock code. It's like, hey, you know, it's going red. So the market's going red, your stock likes going red, and it broke out of the previous range. This would be a good stock to get. So I'm just going to say, because the program does this kind of stuff for you, is if we were to buy this option, I'm just going to, I'll skip it. I have to reload the day to do that because I was showing my neighbor here. But if we look at this price here at, like, say, 72.75 and move forward, it's like, well, what did it do? Well, you can see from 72.75, which is over here, it went down to $70. That's a big change for this stock. You could have made a lot of money there. And we actually pretended to trade right here. I did that earlier, like I said. This is a great time to buy this option because of the position it sits at when we were using 3-minute candles or 5s. And so we got in, just following it, and I only have 2 exit signals. They're pretty easy. It's like when it goes above this line, which is the mag line, or it goes to white on the background, it's time to leave. And you can see here, I'm going to bring up the window that shows you how your profit is. It's 25% right now. It's like, I'm going to back up a bit. When we got in, there's no profit. At 11% in 1 minute. My rules to get out are, I always like to get 10%. And if I think this thing's going to continue to go well, and remember we talked about it, it's like this one's in a good position because it's breaking the low for the last bunch of days. It's a candidate for doing well. So I would be selling half at 10% profit right there, and I'd let the other half go. Now, I was telling my friend here, it says, my rule is if I can get 50% on the second half, I will, because I've done lots of times where I had the 50% and I thought, oh, it's going to go more, and I'm going to. So this is years, well, more like a decade and a half of doing this kind of work, where my rule is I'll get out of 10% right there because that's profit every day, bing, bing, bing. But once in a while, I'll let the second half run to 50%. Now you can see right now it's at 63, and I would have gotten taken out. And it's like, well, no, let it ride. Okay, you let it ride and see how it turns out. So it's back down to 25%. And anyways, to make a long story short, and you can see this all in the replay, the data's all there. You see, here's your exit. You would have gotten out right here when it went to white. So the second half I would have made 10% instead of taking my 50%. So this is not about proving we're right or how smart we are or none of that. It's just like, you know what, this is all based on probabilities. And the idea
and there's two parts to this. One is don't be greedy, although 50% is
phenomenal.
I think is phenomenal, and it's not a horse race. So don't go, come on, just another 50 cents, just another 50 cents. Come on, you can do it. No, that's not a good idea. So if you hit the 50%, wonderful. Take your money and run.
Yes.
And there you go.
And these are my rules based on lots of experience on my part. And there's other people. Everybody's got their own ideas. But what I'd really like to do is like show me somebody that's making consistent money. I'll follow them. And 10% is pretty easy to get all day long. You just have to find the right trades and be picky. It's better to be picky and only take a couple of good trades than to take a bunch of mediocre trades. And we'll look at a couple just quickly here of mediocre trades. But the real thing is I'm telling you that the best stats, I'm going to move that out of the way, are when we look for something that's breaking outside of this box. That's why this piece is here, and that's why this window is designed the way it is that everything that you really need is here for you. So you don't need to look at this and that and all the other columns. When you get more advanced, and if you want to, you can make your game a little bit more complex. But you could actually trade this way and not have to, I'm looking at another stock here, ever have to change it up. Now here is again the same thing. This stock here broke above all this other stuff, and it says here 20-day break above, so it's like really heading up. And so this one is a great candidate. And you go, well, the whole market was moving up. No, this market was a mixed bag, and that's the point. This is the basket, we call it. It's got 38 stocks in it. So you can see that some stocks are up, some are down. It's really not doing anything. But it's got very strong volume, so it's great for trading. And it tells you all that stuff. And that's also part of what's here in this one screen, is it tells you here, this little sunny thing. It says, well, hey, this is good time for trading. This stock was a gap up. You want to treat them a little different. We talk about that, but in the details part. But the idea is, and we picked this day at random just before we started today. We hit the game button, which is right here in the replay. It says, here, give me a random day. I don't know what's going on. Boom. Let's go. And it gave us this, where some stocks are up and some are down. And so now, if the market was really, really red, these stocks here that it's pre-selected, there's probably a good one here. So here's Goldman Sachs. We'll just look at that. It's got slope. I'm going to turn on our exceptional volume, but it didn't have great volume. That's these histogram bars at the bottom. There was big volume here. You can change the colors. I just make the fuchsia so it's like you can see it. It stands out. this is not going to probably be a great move because there's not much volume behind it. But you see where it is in the position? It's close to being a breakout on the bottom of these bunch of days. It's not quite there. Maybe later in the day when it gets there, then it'll be a great trade. So I'm just going to move forward here a whole bunch, and it still hasn't broken the bottom from a previous day. The bottom is pretty close. It's right here. You can barely see that line above the blues. I'm going to go to the end of the day. It never broke the bottom, and it never did much. It was kind of a mediocre day. But you see the difference in just a few stocks we've looked at on just one random day, that when it's breaking out on the bottom or breaking out to the top, those are the stronger moves. And you know, there's a few more things you got to know, but it's really not a lot more to know. So that's the gist of it. It picks the stocks for you, tells you which ones are the best candidate in which direction, green or red. And if the market, that's right here for you, if it's the market is strongly going against you, like medium to strong, don't get it. Just wait it out. You need to have slope, you need to have volume. So like right here, this was a good trade candidate. You know, even there at the, you know, the end of the, well, it's 150 in the day. So how do you know to get in and how do you get out? We tell you all that stuff. So for example, because I know somebody's going to watch this and go, well, how come you didn't get in here? Because this candle is the one that's the real key. It didn't beat this first signal candle. If this doesn't beat the high of that by 5 cents, it's not a trade. So this one beat that one by 5 cents, but we don't trade at lunchtime. You can see the time down here from 12 to 1. You don't trade. This one here didn't work out. Yeah, but see, this candle didn't beat that candle. That's about all the rules there are using this one system. See, on here, I've got a marker. I'm going to zoom into the beginning of the day a bit so you can see it a little bit better. I've added a marker here just right there where the mouse is. It's a little couple of bars. I'm going to put that in the system for everybody. I do some experiments, and then after I like it, then I release it to people. But this one here is telling me that at that point there, it beat that price by 5 cents. And therefore, that was probably a good trade. You can remember that the volume was awesome at that time. This is excessive volume, the fuchsia. But so it had fantastic volume. It broke the previous. I have a signal. I have slope. That's the solid. It goes to a dashed line. Let me go find another stock. See here, it's dashed. That means the slope is no good. And that's by stock. It figures it out by stock. So here, it had all the ingredients. It had slope. It had a signal. It beat the price. It had volume. And if we go back to that moment in time, let's see what the market was doing. I'm just going to go to 5-minute count. Oops, too far. So what was the market doing? At that moment, the market was a little bit on the red side. It wasn't strong red, but it was a bit on the red side. So I might not have gotten that trade.
Let's suppose that you bought that,
sure,
and we let it run a little bit and just see kind of what the percentages would be.
Sure. So this is the point that I would have bought this, because at this stage here, it's 5 cents above. You see, this candle is complete, and we're looking for complete candles. So what I'm going to do is we're going to turn on the little tracker here for it. We're going to say, yep, we bought it. And so it puts a little marker on the screen, and we're going to move forward. Minus 9% for a moment. That's okay. That's with, you see, it didn't close below the line. I didn't get a wrong signal. You have to understand that you're going to sometimes get a little bit of reversal. This is partly happening because the market is red. but it's not super red, it's just kind of red. So here I'm at positive 10%. I'd be out of half of my trade in a profit. It's
And
done.
how long did that take?
Let's see here. About 3 minutes.
Okay, 10%, 3 minutes. Not bad.
Not bad. Bank gives you that, right?
Mm-hmm.
Uh-huh. So now letting the other, and you can make it a quarter or a third or whatever you want, whatever you're comfortable with. And
So we buy 2 contracts, so we sell one, and the next one.
yeah, so the next one we're getting out at when it crosses the line. In my case, 50%, so I'm out.
Yeah, actually you made a mistake and it's 60.
Yeah, so
You're slow.
yeah, well, what I would do is I would actually place my order at the broker and say, take me out if it hits this price. And so somewhere along the way, in a microsecond, somebody's bought my stuff. And they're happy because they're going, woo, I got it for cheap. I'm happy because I got my price. And other people are like, yeah, but you could have, yeah, you know what, could have a whole bunch of things. Should have bought Microsoft shares back in 19 whatever and sold them in 1999. It's not about could have. It's like, what's a repeatable success program? So here it is. I'm just moving forward quicker. It's up to the 70 kind of percentage range, 80, 100%, 100. Yeah, so there's going to be people out there that get that 100%. But I have to tell you how rare that is. It's not common. And I'm interested in getting paid, getting paid, getting paid. So I'll take the get paid all the time at a smaller thing, because if you add up all the numbers and you throw the computer at it, and I've done that where it looks at 7 million candles, it's better just to get paid something than to always be looking for the big payout, and then sometimes you lose money even though there was, oh, but I had all that. Yeah, well, you got greedy, and that's okay, but in an aggregate system, it's better to get paid something all the time than it is to hope for the long shots to pay out, or the unusual ones. See here...
To use a baseball analogy, Babe Ruth had huge numbers of home runs, but he also had huge numbers of strikeouts. So
Yes.
you go for the home run, which obviously this is, but you're going to be putting up with a lot of oopses and losses, or you can go with the base hits, and you just keep getting your base hits over and over and over again, so you're increasing your volumes, right?
Absolutely, and there was a great movie done a while ago based on truth, reality, called Moneyball, and it's a baseball movie, and that's what this guy figured out. He says, you know, I can take a mediocre team, not the A team, and I can probably win, because if I just get people on bases all the time, eventually some of them get to the home plate, and he worked it all out, and he proved it, and it works. So just, yeah, like you say, just get your pay. This is not gambling, at least it's not meant to be gambling the way we do it. It's meant to be repeatable success. I just want to get paid. So here you had a home run. Let's just see how far it goes. I'm going to back up a little bit. So at this stage here, the candle has completed and it's gone all white. You're at 108%. Pretty good. So, and this is why I can't tell people you must, for a lot of reasons, but if you said, well, you know, it's still above my happy solid line, I could stay in. That's right, you could. And let's just see how that worked out. And it's going and going, and you would have made even more money. But if we look at how much more you would have made, if you got out here, you're not making a whole lot more here. You see, this is why this number is on the screen, where it says 227%. This stock has gone crazy good today, on this day. And you can look this day up if you want. But it's all here in the program. It's the 19th of March, no, April 2013. That's not normal. This is way above average. That's why that number is there. So I don't expect to make a whole lot more money on the green side. You got paid really well here. It's like, what more do you want? that's my feeling, and there's going to be people that always want more and more and more. I can't help you there. I will tell you what you can do that you're likely to get paid on. This has been a phenomenally good one, and I do ad hoc trading here and there because I know the markets well enough. It's like I see something, I'll go grab it. But again, the times that I've done that and tried to get more than 50%, I have not walked away with a profit. I walked away break even or thereabouts, and small gains. So that's just my rule. And if you've got something else you want to do, that's great. The tool will help you do all that. You can build your own system. But what this is all about is you don't have to build one. Just show up, and we'll show you this one. So here's this one that went red today quite strong, and it told you it went red, and it was a big gap down. You can see down here it was a big gap. And so you had a few good moves out of this thing. And that's about it.
Any questions, Steve?
No, it looks pretty simple. I like that setup right there. It does make it a little bit easier to understand at the beginning. I could definitely see that. Personally, I would probably add a couple of things that I've been using onto that, but
yes,
I would just complicate it for the beginners for sure.
Exactly, and that's the point. Is that I want people to pick the tools that they like, because it was Scott the other day. He says, well, why don't you have the Y point on there? And the Y point's awesome, but it's like, for beginner, the rules are simple. They don't need all that. And if they want to fine-tune their thing, we've got so many things. And like target prices is another really powerful tool. And so I just put that on. I'm going to hide the time and the a couple other things. But here's the target prices. They work really well a lot of the time. They're not perfect. None of this stuff is perfect. But you can see here that this pivot price, it acted as support here. Well, this would have been a good time to leave. You would have made your money here. And if we just go roll through a few other stocks, you can see how often the pivot, you see there, it bounced against it. So if you just add a couple more things after you're comfortable with, I got it, and why did this thing turn? It should have kept going. Well, just add in the target prices and see why. See, like here, this is drawn before the day begins. It rolled up to here and came back down. Now, we had no signal, but look at this one, RC. Rolled up to there and came down. Well, if I'm trading, I've got lots of time to look at the chart, after I'm in my position, and, I'd like to have that stuff on. This is like, how much room do I have on the way up? Well, I have a pretty good bit of room here, and if we go, this is where the program helps support people. If I go roll back to 11, just show you how we do that. You can do the arrow keys, or you can just say, well, I want to go to 11:10. We're close enough to it. I'm going to just make it go forward a bit. So here it says I've got 38 cents from this price until I hit that target price. Well, that's not a lot of room. You can make money there, but it's, I would be setting my exit price so that I would get out just before it hits that point. And I know people go, with 38 cents you can't make any money like that. Oh, yes, you can. There are people trading $200 million accounts with SPY, and they're doing really well, and they're making it on these pennies. You go, how'd you do that? Well, yeah, that's another day. But you see here, it's telling me I only got 10 cents to go before I hit the target price. So if I'm going to move up a little bit, I got 5 cents. So now it says the next target price is $1.58. So will it hit it? Oh no, it seemed to have crawled back down below it. So it bounced off the line. That's the power of the target prices. They're awesome. So we've got a lot of things you can add later, but the beginnings is, get really good at it. You go, yep, that's a trade, that's not. And then after you get that part, you can tweak it a little bit to say, yeah, that was a trade, but there wasn't much of a real opportunity. And I suspect that in about half an hour more of this kind of conversation, people would know enough of the rules, and we have a video for that, that they would go, I know what to do. And then after maybe another 3 hours of looking at a few more things, or a webinar, or however you like to get that, they would know really well, like they know how to do anything else really well in life, they would know really well how to trade with this one window.
Yeah. And the fact of the matter is if you use the one window, use the way we've got it set up, and you can consistently make 10% on your money 3 to 4 times a week. You may decide that you don't need to, you're at a point where you can pretty much decide I need to have a capital fund of X amount of dollars making 10% on the amount of money that I'm going to be trading, which is not, of course, your whole amount.
Mm-hmm.
I think you say no, don't trade any more than 10% of your capital. You can figure out what you need to have in order to make the 10% that you want to live on and have the type of lifestyle that you want.
Mm-hmm. So like the fellow locally here that does the bar system, and I'll just show you what that window looks like. It's this. And there's charts and some cool stuff that comes with it, but it's it fits his personality. He likes it. He loves it. Anyways, he only puts on, well, I'd say only, he puts on 25% of his capital in a trade at a time. And this is risk management. You really don't want to be doing double or nothing. Like binary options is great, except that if people put all their money in there and the commission is too high, it's not a successful trading system. And then you get wiped out because you put everything on the line and you hung in until the bitter end. That's not good. And there's lots of good books out there that'll agree with all that. So the point is that if you put a maximum of 25% of your account at risk and you're only looking for a 10% gain or a 10% loss, that means all you're really risking in your account is 2.5%. Very low risk. You're not going to get wiped out, because if you're following your rules, you won't get wiped out. It's like, okay, that was a bad trade, I'm going to get out. I can still play tomorrow. And so using that gradual, small, got paid, he grew his account on average every month about 30%. Now that was the account went up 30% because he got on base, and his whole account is growing. And 30% a month he trades maybe 20 minutes a day. He's going to be job independent, and he showed his brother how. Guess what his brother's going to do? His brother's got a couple things to look after right now, but he's going to be job independent in a year. He can go do what he wants. And he's doing it. He's got a track record. He's got the discipline, and he knows I'm not hanging in on a lousy move. If it's a good move, I get out. If it's a bad move, I get out. So he's usually done in about 5 minutes of trading time. And that's part of, again, why this little sunshine marker's here all over the place. If it's a crappy day, it tells you. And you get familiar with it. It's like, no, there's nothing good here. Everything's a low rank. It's a mixed market. It's nasty. Well, it actually tells you right here. It's like, well, you'll get the lightning bolt or something if I go pick another day. I don't know of a bad day to trade, but I'm just going to go pick something here and see what turns up.
Yeah, so you're making a really good point, and that is you're not going to be able to trade every day. You don't need to force it. You need to just keep looking for a good trading day and a good trade to make on that trading day and make your money. And there's going to be a lot more good days than bad days, but you're going to have a bad day where it's just like, you know what? Go to the beach.
Yep. Don't leave your money at the street, like for someone to pick up. It's like, put it in the bank, not outside the street. And so we tell you all that stuff, and that's what we're going to give you in all the training. And it's you've learned more than half of it already here, more than half. So there's really not much except to ingrain it and to practice with it. And then you go, that's all there is? Yeah, that's really all there is. So most people that get good at day trading, takes them about 5 years. and they usually blow out their trading account at least once, meaning that if they had 10,000 in there, they lost the 10,000. So there's never been as easy a system to learn and to prove as this is. Never happened before.
So, Alan, I may be putting you on the spot, but can you share I'm the Boss with Steve?
Oh, sure. I don't know if you saw, but there's a video that does that. It's right here.
Here's the basic summary of our rules.
Yeah. So I'm just going to play that for you here. We'll make that full screen. So I'll give you the narrative. I'm ready means you're ready to trade. How's the market today? And that's like those weather indicators. It's like, is it a good day or a bad day? We want the daily direction to agree with the stock. So if we get a green signal, we go with it on the daily. It's got to be a breakout. Remember we talked about that on the 60-minute chart on the bottom. We want it to be breaking out for a better one. Opportunity is the target prices. I'm not going to hit something and then, my move is over. Is it a strong move? Does it have the slope or the volume? We want one or the other. Both is better. And finally, we're looking for a signal. It's got to be a fresh trade. We don't want an old trade. And that's what you saw today. Now,
I'm the boss.
I'm the boss, right?
So I'm ready means I'm in a good mood. I'm alert. I've gone to the bathroom. I'm not checking my cell phone for messages from my girlfriend or my wife or my boss.
Right.
Market conditions is the market itself is heading in the direction that I want my stock to go. The stock is heading in the same direction as the market. So if the market is green going up, my stock is green going up. If the market is dropping, my stock is dropping. So I'm not buying a green stock necessarily when the market is strongly red. And I'm looking for a breakout, so I'm either moving up above 20-day highs or 20-day lows, and the opportunity is there. I forgot what you said about that. It has to be a strong move, which means we look at the slope, which was that blue line, or volume. So we got to have a lot of volume. You got to have a lot of potential movement. In other words, if it was surfing, you want a good wave. You don't want a wimpy wave. And then, of course, we need the signal. If it's white background, then you really don't have the signal.
Yeah, and you want to be fresh signal, not old.
Fresh signal, right.
Everybody's got at least one bad habit, and we talk about that in some of our videos. So one of the bad habits people have is get in on an old move. Well, it's over. Anyways, that happens to be my personal leaning and problem I had to overcome. And it's not complicated. It's just like, oh, I'm doing that. So this is what years of experience give you.
Well, and that's the advantage of the fact that with the Wall Street Genius, we've got the live, so you can be, 9:30 New York time, you can be working with the market live and everything else, but you know what? Market closes at 3 o'clock in the afternoon. You can spend from 3 o'clock in the afternoon till midnight if you want, practicing any one of years and years and years of days going back. So it gives you the advantage using the replay because it acts exactly like the market is live, so you can practice and practice and practice, and I think that's really an important part of this because then you can say, okay, you can pretend to buy with the buying and the selling thing, and then you can see, wow, I really screwed up on these particular trades. Well, why was that? Oh, I didn't get a strong signal. Oh, I got in too late. Oh, I went to the bathroom in the middle of my trade and it moved against me. And then you start realizing quickly what your self-sabotaging behavior is, because I think there's two parts to this. One is you have to understand that there's somebody on the other side of the screen who wants to take your money, steal it from you legally, and you got to be prepared for that. And the other side of it is, for some weird reason, we love to throw our money away. So you know, because I mean, I just, it's cliche to hear of people who are down to their last dollar trading, you know, gold options or some such thing, and then the next thing you know, it turns around and they made $200,000, and the next thing you know, they're back on the street with no money because they lost it. So
Yep.
what's going on there? Well, that's self-sabotaging behavior, and we need to be aware of that, because otherwise we're going to be saying, oh, this is great, and then whatever our financial thermostat is, I'm comfortable making $200 a day. I made $400 a day the last 3 days, so now I'm going to do something not consciously, subconsciously, that's going to wipe all that out, so I'm back to my $200 a day average. And so we need to be aware of that, and it's a lot easier to be aware of that using the replay, because that's fake money, right? Than it is using the real money. So we really recommend taking advantage of lots and lots of practice. If you want to be a professional singer, a professional dancer, a professional football player, you get a lot of reps, and we think it's really important that you get a lot of reps in this industry as well if you want to be successful.
Yeah, absolutely. Well said. So I've been playing in what would be live market mode where 10 seconds is 10 seconds while you were explaining all that, and just on this one stock. And this is what the live market's like. The live market's a little bit more fluttery, but this is meant to just give you what it feels like very quickly. And yeah, you can jump around with the replay controller. I use the play button. You can make it go fast, slow, jump around. So anyways, huge amount of data here.
Great. Steve, any last comments? I think, Alan, you've done a great job of explaining this. I really am just delighted at how you've put all of this together. I'm very excited about it, and I'm excited about the future of the Wall Street Genius. And I think we've come pretty much to the end of what we need to discuss, what we wanted to discuss today.
Mm-hmm.
But Steve, before we go, just any comments, questions, or anything you want to say?
Just to add on the whole experience thing, by not trading with money, you know, there was a point where I was doing over 50% a trade, and it was getting really good, and then all of a sudden, with the same exact strategy, because I was being, you know, a little bit more risky, I would lose just as much. And that went on for like at least 15 days. And I couldn't figure out what it was. And I went back and talked to you guys about, you know, some of the things that I was doing. And you guys reminded me of the basics, pretty much all the little things that we just went over. And then I practiced. And what was happening was I lost a couple times, and then I became hesitant. So then it basically made my losses even worse when I would get into trades late, and because I was hesitating. So the practicing got rid of the hesitation, and then over time, probably about 2 weeks, the numbers started going up again. My gains became less, but they became more consistent, and that's really been my goal with the whole program. I think that I'm just about there now. It's just a matter of volume, like you guys were talking about before. But I really like, especially the one window strategy. I really like the table on the left and all of the things that you chose to put there. I really like how it's a condensed version of the original.
Yeah, cool.
Thank you. Yeah, and just so you know, there's some older folks that trade, men and women, and they also really quite like this, because, you know, some of us grew up with computers, and they didn't, and so, you know, making it simple, it's just natural for them. So yeah.
Great. Well, thank you very much, Alan. Appreciate you taking time to go over all this, and Steve, appreciate your contributions as well. And thank you for watching, everybody. And we're going to sign off now. So head over to www.wallstreetgenius.com if you want to know some more, and we'll talk to you soon. Bye-bye.